Here is a bigger picture view of the natural gas chart. We'll get into some of the statistics of it, but just I wanted to show the look on the daily. You can pretty clearly see that over the past month, basically starting when Russia invaded Ukraine, the trend just accelerated to the upside almost exponentially. I mean, there's a lot of those fundamental reasons why that would happen, especially when Russia invaded. Ukraine and Russia are big exporters of natural gas. Europe was in a supply crunch. The U.S. was not able to catch up in providing that supply. So the world has a natural gas shortage, same with a shortage in basically every other commodity right now. And so that is what led to this extension in the natural gas price and eventually the trade that took place.
Your big picture on a scale of 1 to 10, we're going to give you an 8. And if you go back to the last slide, what I would love for you to add and what we want you to add to be getting to that acceptable score is I want to know the key levels in the SPY that are most important. I want to know the key levels in the Qs that are most important. I like how you point out that we're under these key moving averages, but I don't know how far away we are to the next important technical levels. And you want to be pinpointing that out in your bigger picture because that's going to matter. If we're super far away from the next resistance area on SPYs or Qs or whatever the important ETF is or indice is, then we're going to trade that differently than if we're just below it or right near it. Okay, let's go to the next one, next couple slides.
So here are the intraday fundamentals for the natural gas idea. Some statistics. Natural gas was up 68% in the 1 month prior to this day. Just like to emphasize how extreme that is. I didn't find any data where we had a move that intense in a commodity. So we're super extended from the 10 and 20 day, and there was no prior relief day in over a week. The hourly was extending from major trend lines. So in short, the trend was accelerating, and that's exactly what you want to see when you are beginning to stock a trade for that mean reversion or the rubber band trade, as some would say. The daily moves were getting extended. This is something Lance talks about, and something that has probably been one of the biggest focuses for me for these overextension trades. You want to see that range expansion, because if you're just having these grind up days higher and higher, if to the downside, let's say the grind days to the downside, you're not really having that capitulation or blow off, and at that point you're just catching a falling knife or fighting the trend, and that's not the trade we want to be making. And finally, so there were approaching this day, about the day before or a couple days before, you started seeing headlines about natural gas at a 14-year high, European supply crunch, the US doesn't have enough natural gas to get us through the summer. And so when you start seeing like Bloomberg and the Wall Street Journal and CNBC all posting these really extreme sentiment articles, basically, that's how I use it, kind of the sentiment check. I mean, to me, that for these type of trades, it usually signals we're getting close to that short-term extreme. And volume was picking up, so that was signaling that we are definitely getting to that short-term extreme. This day was the highest volume day for that entire up move. So that is the blow-off type of volume you want to see. And we're approaching on natural gas that 8 psychological level, which is significant as well. Some other stats, oil had already topped March 7th, so about a month prior, oil made that parabolic move. Sentiment was extremely stretched, trend was accelerating, and range was expanding. So these are all things that I definitely want to see as I begin watching this trade for that mean reversion. And then just for UNG and KOLD, so UNG is the triple leverage bull ETF. So as natural gas goes up 1%, UNG will go up 3%. And this is correlated to that natural gas price. For KOLD, it is the triple leverage bear ETF. So natural gas goes up 1%, KOLD goes down 3%.
A couple minor things, if I can chip in there.
Yeah.
So first, I love what you're talking about price expansion, because what you touched on about not wanting just a steady grind higher is just so important to me. I really need an acceleration in that. If something has a slope of +1 and we're just steadily going, I never ever want to be shorting that. The most important difference that people miss is you need that acceleration in price over time. So that is huge, couldn't agree more. One thing I recommend to even take a step further is when you cite the volume increase, what I love to do is even quantify that. And so one thing I found is what I like to see is on those blow-off days is ideally even 2x the volume or on pace to do 2x the volume of that prior day. And what's amazing is that prior day is even off a heightened base as well. So when you're getting 2x on that blow-off day, you're really talking so many multiples of what had otherwise been a normal day.
But yeah, so the volume, I definitely should begin tracking that. I think that is really important to build a database of these blow-off days. And I do think, I don't have the data on that. Maybe you were aware, was this 2 times the prior day volume?
It's certainly at least a heuristic I use, and sure, sometimes it won't be, but I would say the more the better. And I think in the absolute best ones, you will see even more than 2x. Like if you were to look at MSTR or Carvana on some of those bottoming days from a week or two ago, those were even doing 30-40% of its float in a single day. And obviously not the case with an ETF like these or an ETN as they are. But yeah, definitely worth studying and adding to your future playbooking.
Yeah, definitely. I will definitely begin tracking that. Okay, so I think we can move to the next slide. These are just some basic statistics about UNG. The catalyst is we're short-term overextended in natural gas. The theme is a market with the sole focus basically on inflation and the energy crisis stemming from the war in Ukraine and natural gas at a 14-year high. And the setup is a short-term overextension.
Okay, so I'll jump in here. Stock selection. on a scale of 1 to 10 is a 10 out of 10. I really like how this is so super extended. We want to find stocks that either have a news catalyst or a technical catalyst. To me, this is a technical catalyst and a really strong technical catalyst. It's at a price that's not sustainable. It's at a price where we want to really be watching. And so something extended to the long side, something overextended to the downside is really, really terrific stock selection. So 10 out of 10 on your stock selection. In terms of your intraday fundamentals, I got you coming in at about a 9.2, well, 9.2. The one thing, and I am nitpicking here, but just to sort of give you some feedback, tracking specifically what news catalyst makes the market come in a little bit, that specific tracker would have been a little bit more interesting. But good, but strong and very solid there on intraday fundamentals. All right, let's move to technical analysis.
So this is the daily, and to the right side you'll have some intraday price action, but let's focus on the daily for now. So you can clearly see just the way the trend is accelerating. Just from the past month, how it's just kind of grind, pull back, grind, pull back, grind, pull back, just a steady trend higher. But then something changes about in the last 4 days up to this blow-off move. You can just see how we're extending from the 10-day, and that's something I look for. And like I said on the other slides, the hourly trend is accelerating. So we're now getting into that type of move, like Bella said, that is just not sustainable. And you can just see how different the price action looks on the daily. Like that is a clear acceleration of the trend and expansion on those daily bars. And on that blow-off day, you had the gap, that pretty large gap from the prior day to the open of that next day. And that is also a check in our favor. Probably one of my favorite signs of this trade was the volume, something that Lance made the point of. You really want to see that pretty high volume on these blow-off days. And so, yeah, so we're looking for that rubber band snapback type of trade. So here's the intraday look on the blow-off day. You can see through the morning, we're just holding that steady trend to the upside. We're just kind of grinding and grinding. Volume is definitely elevated. So this day was about, I think, 3 R-ball through this move higher in the morning. But still, if we're using the right side of that V analogy, you don't really want to be shorting this until it breaks that trend. Because at that point, I mean, who knows how high this can go, right? We could have gone 28, 29, 30, 32. You just don't want to be stepping in front of it until that trend changes. But it's also important to not forget the daily chart and get caught up on the intraday stuff. That's something that I sometimes have an issue with, like getting caught up on the intraday action on these turn days. But so the notable action on this is once we get to that 28 area, you can see there's something different happens in this move. There's 2 things that happen. So you have the volume to make note of on that breakout, and then the failed breakout. That's the highest volume of the day, even more than the open and through the morning. And you have a break of that trend. So now you're on the other side of the V, and that's when things can start getting interesting for executing and getting involved in this trade.
I think that's really fantastic analysis and assessment of why you want to be on the right side of the V and applying it there. It's the perfect analogy, and I think that you identifying how hard that crack was on the volume is really, really astute as well, because that was a very big tell there. One thing actually I think is worth thinking about for the future. I think it could even be worth looking at the underlying future charts.
Oh, I do have that, the next one.
Oh, nice.
Sorry, I totally forgot. So yeah, you can see, so where that breakout occurred was also right at the 8 psychological round number. And to me, the fact that we lifted there, we're already accelerated on the daily, we're accelerated intraday. The fact that we broke out there and then stuffed super hard on just extremely high volume and failed super hard. And then we had that bounce back into that lower range level and fail. At that point, I mean, for me, it's like, all right, risk on, this is kind of where you want to start laying into the short. And so that's underlying, and I had both of these up at the same time. You definitely, if you're taking a trade like this with like a commodity or an underlying asset, you have to be watching both at the same time.
Yeah, and well, so actually I kind of agree more with your assessment of that intraday and the ability to then short that versus the high of the day. Not sure if this was included, but I think actually on the futures, if you included the daily chart, I think the extent of that trend, it was even more apparent of just how many up days it was, because obviously on the futures you have more hours of trading, so you get a much kind of cleaner picture without the gaps of just how wild that trend really was. I think it even might be a little bit more clear than UNG.
Yeah, I didn't include the future chart. I probably should have. But yeah, that's again just another variable to show you how extended we were.
Yeah, exactly.
So yeah, I just the biggest thing for me for this trade that I saw that got me involved was that failed breakout at that 8 level, and then the heavy volume, and then that lower high. I just think at that point, the trade is on. You can risk high day. It's pretty high probability in your favor at that point. Lance, is that kind of how you viewed it as well?
Could not agree more. Yep, it's such a perfect stop for it. You've got a lot of indicators aligning between. What's beautiful is you have the intraday and the daily screaming the same signals, whether it's the volume and everything else, the price expansion. And the best part really was just that you're now structuring it after a turn and you're giving it the proper stop. And it's perfect.
Yeah, and the best trades for me are when the daily and the intraday line up. Like that China, the FXI bounce trade, same idea. Like all these overextensions that work the best, you got to have the intraday and the daily line up. So that's also why I was really liking the way this trade was setting up.
All right, I'll just jump in here. So technical analysis, we're going to give you 10 out of 10 on that. I like how you were very specific about what you were looking for with your technicals. And so the combination of this being overextended on your daily and your intraday. Secondly, a recognition by you, an astute, savvy recognition by you about how the highest volume comes in towards the top. And that certainly can be a subset of turns when that additional volume comes in on an intraday basis. And then the break of the trend line. So you're not just saying this is overbought, you're being specific about why you think it's a good short for these overbought conditions. 10 out of 10.
So tape, I do not have the tape for this. I mean, mostly because this was it kind of took like many hours to play out, and the tape was not the biggest factor in this trade, like we kind of just went over. So I didn't have the tape for this. But basically, if I did, you just want to be watching it at that 28 level. Volume should be crazy, speed should be a little bit different, and when it failed, you should definitely see that the stuff through 28 pretty clearly on the tape.
Well, let me jump in here. So
here's my trade management of UNG. I give myself like a D minus, D for the way I traded this, for how the opportunity that was here. So on that grind higher, I started in some like small puts early. So I'll just go over how I was going to play this actually. So I was thinking UNG I wanted to take puts on, and then for KOLD I was going to scale equity long. That's like the inverse. So when natural gas was going to crack, KOLD was going to gap up and go. So, and I think the reason playing puts on a trade like this is super powerful is because when you have such a big gap in either direction, or a big move, when it does have that rubber band snapback, the options will explode because of the IV, and it can just make the trade really powerful. So I did start trying some short on that grind higher, and this is kind of one of my biggest issues still today. I'm overeager. Like when I know a trade is close, I get impatient and I start trying it before that turn may be in. But what I never do is I don't play like that game where you just add. So I was fine taking paper cuts, trying to catch the turn, but I would never have just been adding and hoping that it was going to crack, and because that's really dangerous. So that grind higher, not happy that I was trying a little early. And unfortunately, I had a doctor's appointment midday right when we had that crack, because I actually had strep throat, so I was getting antibiotics. So I wasn't there to start scaling when we had that blow off and crack, which is unfortunate. But once that turn was in, that's when I got way more aggressive on the option side, because I had that hard stop at high day, and you can see the triangles here were where I started scaling more puts. So that was on that turn day, how I managed that. So I was buying the puts, the weekly 27s, 26, and next week 25s. I also took weekly 23s. I just thought the RR there, they were so cheap put premium wise that it just made sense to go for that. If we had the crack to the 10 or 20 day, which was definitely possible for this type of trade, so I was just thinking that was worth putting on that contract as well. And so the next day, we walked in with an 8% gap down in natural gas, which was, that's a really nice way for this trade to play out. And my overall targets for everything were the 10 and 20 day. That was the targets I was going for. But when I have a gap that big, with the options, the way they moved, I have to take some off. I think just because of the way the IV worked and how much I was up and how the trade played out, I took off 60 to 70% of everything on the open, which I don't know, Lance, how you would criticize that with such a large gap. But for me on a trade, like when I saw, it was my second biggest overnight trade. So I maybe I was focusing on P&L taking off that much so soon, but that was how I executed that on the next day.
So first for you guys, I think one nice thing is the more experience you get and the more times and practice you have with those see it moments where everything aligns. Like you're already saying, like generally I'm often overeager, but like I always see it when it happens. And I think what happens is with experience, you learn to distrust yourself. And that when that moment comes, you're going to recognize it. And then you also get okay with the fact that if that moment doesn't come and you don't see it, well, then that's fine too, because what that means is it didn't set up properly for you. And so this is one of those things where it's like true freedom of FOMO is being able to say, this is making a big move. I'm looking to play it in X, Y, and Z fashion. If X, Y, and Z fashion does not occur, then I'm okay missing this move despite it being big. And that is hard for a lot of people, but it's so important, right? Because it's not enough for something to just make a big move. It needs to move in a way that is capturable for us. So if this cracked, then went to highs, 12 different times, like look, even if it eventually goes down, it was not capturable for our system, and so be it. There's nothing wrong with that. So I think you'll even become better at avoiding the FOMO with experience. Regarding your decision to scale out of there, I did pretty similar. So the way I handle it is, obviously that was a very, very large gap, and especially including that follow through. And trades are dynamic, right? The risk reward when UNG has pulled back to 23 is way different than when we're still at say 27.50 or something, or 27. So I did scale out, but usually I try to at least hold a little bit of a trailer position just to still my overall proper stop, which tends to be prior day highs or something. And one other thing, I'll even give you a little bit of a layup on, because I'd love to hear what I know the answer will be, is I'm sure a lot of people that are listening or watching the video might be saying, like, wait a second, how is it that you gave yourself a D minus? Like, I don't get it. The trade worked and you made money. So can you explain why, like, how those two things can be true? Because I would totally agree that it's not mutually exclusive.
Yeah, I mean, even though this was a great trade, like P&L wise, and I guess the way it played out, for the opportunity, I could have traded it way better, and I could have made 2 or 3 times the amount I did. So that's why, just like the way I was trying to catch that turn early instead of just like you said, sit on your hands. Because like when I know it's turned, then I can really lay into it and put on the risk. Like, why am I trying to find the top? It's like there's no need to find the top because when these things crack, that's it, and it'll be obvious, and that's when you can really lay into it and put on that risk. And then another reason, like I was also expecting that morning of like that gap down, I thought we were going to have some sort of bounce into some prior day level to like reshort against. That was what I was hopeful for that day, like to lay into more size on that day for continuation, but it just went straight down with an 8% gap and then just going another 3 to 5% lower. I was just kind of like, whoa, that's pretty odd to me. So
what I love is that you are essentially rating yourself and grading yourself not on the P&L or the outcome, but how you think you could be trading it. So you're grading yourself to your potential and to your ability rather than just the outcome, right? Because you can have a negative trade, but you did everything right, and you can even grow and be improving in a negative trade, or vice versa. So I think that was really, really great. And one thing I would touch on is to your comment about the P&L is like, yes, we're all human and we do ideally trade our P&L sometime, but in an ideal world, we're not really trading the P&L or being up a lot on a huge gap, but we're trading how dynamically that expected value has changed due to that gap. So I'll never try to let the P&L influence my trading so much as what is this position and what does this opportunity deserve? What is the proper stop? What is the proper size? What is the proper action in this moment, irrespective of the irrelevant number on my screen?
yeah, I mean, that's such a good point. And I think also that FXI trade and the China trade from the prior month, that kind of got into my head where I also did the same thing where I took too much off right on the open and then everything just kept going through the whole day. And I was like, oh, I mean, probably shouldn't make that same mistake. So there was some of that using a prior trade that got into my head, but that's okay. And then so I scaled out more the next day, and then the 23 puts way down there on the 22nd, all the way at the end of the week when it just kept going lower. So here's KOLD, similar idea to UNG. This one, I took way more just equity instead of options because I didn't know how, I didn't calculate, the way the triple leverage would play out. So this one, I started scaling when natural gas got pretty extended to the upside. This one, I mean, I guess you could say I was on the wrong side of the V at that point. However, I was not full size. So this is something like Nate Mashad talks about a lot that kind of influenced me. Like, it's okay to start in small, like scalers and feelers, but you're not getting, like if your full size is, I don't know, X amount of shares, you don't want to be putting on 50% of that. That's not a feeler. That's half your size. So these scales were like 10% at the time. And then once it did crack and we started holding higher lows on KOLD at the end of the day in the afternoon, that's when I started putting on more size, and I took another options position buying the 10 calls for this one. Again, same rationale for UNG. Once it cracked, that's risk on. Same idea, just to the inverse for the long. This one I sold all the equity on the open. I tried to get cute and like just a little fancy with it and add more through the day, but that made me a little micro focused. And I just got flat around 9.4 on the equity, and then the 10 calls the day later when we got to 10, this was like a nice addition to that UNG trade. And so yeah, that was the trade management.
All right, so trade management, I'm going to give you a score, so you got 10 out of 10 on trade management. I'm going to grade you not necessarily on how well you managed the trade, but how well you thought through how you managed the trade, which I think you did very well. All right, moving forward.
Great. So improvements, our trade review, this was an A++ overextension. It presented a bunch of different areas where you could have got involved with the hard stop, with the real risk, so not just that trying to guess the top or add. The best entries were after the intraday blow off. That's really important. Like having that patience was what made this trade work really well. So trusting myself, that was something I could have done a little bit better with the option side since everything was so cheap. And I knew deep down we're really close to that crack day. Maybe we go one more day higher or gap up, but like I could have put on more options just to really maximize that trade. Second thing, I could have put on UNG equity, which I did not do. That was something I could have improved on. If I'm short if I'm taking puts, I can also take equity short. That's just something to add into the playbook. We talked about this, and just the biggest thing, this was a stress-free trade because I wasn't early and because I was involved at the right time and the right day. I've gotten myself into this position before on different overextension trades where I am a day or two early, and I am just playing that game where I'm adding, and then I'm drawing down, and it's just really not fun. So being on the right side of that V makes the biggest difference P&L-wise and for the mental capital. So